I bet you've heard of the 100,000 euros high net worth individual flat tax of Italy, but are we sure is that actually worth just for the ultra high net worth? So, first of all, this tax regime has been made to attract rich people to Italy. And basically, since we know that the Italian tax system is not the most generous, especially when you make substantial amount of money, they decided to create this system to say, hey, you come to Italy, you pay 100,000 euros and that's it. So the requirements are quite simple. First of all, you need not to be a tax resident of Italy for 9 out of the last 10 tax years. And that's regardless of your citizenship. Then you can pay 100,000 euros flat tax on every foreign sourced income, not Italian income, and this regime lasts for 15 years. It is also possible to extend that to any family members for 25,000. Now, first of all, this is just to cover the foreign income, not the local income. The local income will be taxed at the Italian regular tax rate. However, as a new resident, you might also opt for new residence tax regime on Italian sourced income. Then you can also cherry pick every foreign sourced income, which means that you can say, hey, I want that income to be covered by the flat tax and that other one, I want it to be covered by the Italian tax legislation. So yes, it is possible and it requires some planning. However, it is very important to understand that you must check the double tax treaty because sometimes an income might not be taxable at all in Italy. And the other thing that is also advantageous, you are not required to disclose your foreign held assets, and on top of that, you do not pay any wealth tax, which is good because overall they boost your tax bill and you're not required to do so, and they cannot give you any fine for not disclosing that. So we know that fines are quite heavy, but if you're not required to do so, they cannot fine you. So how do you actually access this regime? So back in the days, you were required to perform a preemptive agreement, and upon acceptance, you might enroll in this program. However, now it is simpler. You just need to elect the application of this regime and pay the 100,000 euros tax in your tax return. However, personally, I prefer to perform the preemptive agreement because this gives an office, the tax office, the binding obligation to abide to whatever they said. If they said that you're in, they cannot run an investigation saying, well, probably those residency requirements are not that right, so you should opt for the local tax legislation. So, it's more expensive, it takes more time, you might need a consultant to do that, however, this saves you in the long run. And by the way, at any time you can disallow, you can say I want to terminate that and then opt for the local tax regime. And you might say, why should I do that? Well, think about capital gains. Because as we know, this tax covers every foreign source income such as rental, dividends, capital gains, employment income, any other remuneration taken from abroad. So you might come to Italy and realize the capital gain, pay a flat 100,000 and that's it. And then you might not have other source of income. And the other beauty of this regime is that you can remit that income in Italy. You can use that money. So if you do the RBC in England, well, you pay fewer taxes, but whenever you use that money in England, then you are required to pay regular tax on that. In this case, this is not applicable. And finally, it is very important to investigate your position and to structure that efficiently because the 100,000 euros does not have any recourse on foreign tax paid and withholding taxes paid abroad. So my advice is to perform an audit of your position, and then you find the best way to minimize any tax paid abroad so you end up with the ultimate liability of 100,000 euros per tax year.